Yo, what up, man? Profit Gang, you already know what it is. FTSTW from the street to Wall Street. And guys, of course, you can see I'm repping the T. And again, if you like this T, okay, you want to hit me up. Maybe I might send you one if you are a loyal student of mine or whatever the case may be. But I just really want to say happy new year to all of you guys. We are finally in 2026, and man, what a ride 2025 was. Okay, 2025 was an amazing year, and yeah, a lot of signals were shared in 2025, a lot of knowledge was given out in 2025, and of course in 2026 I'm going to be doing a lot more right here on YouTube. Now, if you're new, I want you to subscribe to the channel right now. You can go back and watch some of the previous videos that I've done in the past, just to have a sense of what I do here, my trading strategy, my approach to the market, and how I communicate my message of forex trading to the general public. So you can go back, watch the videos, and tell me what you think, and of course leave a comment as well. It's going to be very much appreciated. All right, so in this particular video I'm going to be breaking down my very first trade of 2026, and before I do that, I want to share with you guys some of the messages that I got in 2025 from some of my students, some of my followers, and some of the people that were really a part of my 2025 and people that made my 2025 wholesome. All right. To be honest, right, these messages, and in the moments I was receiving these messages, in the moments where I was reading these messages when they came in, I would have to say these have to be my best memories of 2025. Okay, 2025 was a very long year. It was a very tough year for a lot of people, but the little things in 2025 that made the year very wholesome are these messages that I get from students from time to time, showing their appreciation for giving out free signals or giving out free knowledge, hosting free Zoom calls and things of that nature. And to be honest with you guys, these are very thoughtful messages that you can receive from your students. Okay, so one of them here says, "You're an amazing teacher, been busy these days. I just saw your analysis. The same analysis you do is the same analysis that you teach us." Okay, so one thing that I do is I don't really teach one thing while I use something that's entirely different. The exact same strategies, the exact same approach, the exact same methods that I use is what I actually teach in my community. Okay, a lot of the times you can see students sending me messages how they are catching the exact same trades that I'm catching, how they have the exact same analysis that I have, and things of that nature. So this is basically what I do, right? I want to create independent, profitable traders. I don't want to create traders who are still going to rely on me for signals and things of that nature. And of course, when they see my markup as well, it can give them a little bit of confidence. The traders in my community, right, they like it a lot when we have the same analysis, we have the same entries, we have the same stop loss, and we have the same take profits. Okay, and this is a proof to show that I can actually transfer the knowledge that I have to anybody that's willing to learn. And speaking of which, the course is doing very well. The course is out there. It's a beginner course. So if you're starting to learn how to trade, or if you want to start to learn how to trade in 2026, I want to advise that you purchase the course, and I want to advise that you watch the course religiously, because every single thing that I'm going to be teaching, even in this video that I'm doing right now, every single thing is in the course and is well explained in very much great detail. Alright guys, so like I said in the intro of the video, I'm going to be sharing my first trade of 2026, and of course you guys already know how I trade. You guys already know the strategy that I use. You guys already know my methodologies and my thought process when it comes to analyzing the markets and trading the markets. Okay, but just to remind us that I'm actually following a system that works. Okay, mind you, I've been using this system for the past 3 to 4 years, and I've also trained over 1,000 people using using this same system. And of course, over 20 to 30% of my students have been profitable using this exact same system that I'm going to be sharing with you guys. So as you can see on your screen, I have my trading plan. Okay. So before I jump into the charts, talk about technical analysis and things of that nature, I want to share with you guys my trading plan. Now, mind you, this trading plan has been the exact same for a very long time. And it's because you don't really want to change something that actually works. You might want to improve it, but you might not want to be changing your strategy if your strategy actually works. Okay. So looking at the trading plan here, I have the trading plan is divided into three parts. Okay. We have the analysis part, we have the confirmation part, and of course, we have the trade management part. Now, when it comes to the analysis part and of course the confirmation part, these are basically non-negotiable. Okay. These are not steps that you can actually skip, or these are not steps that you can actually tweak to your own personal preference. Okay. But when it comes to the part C, which is basically the trade management, right? This is something that you can change. This is something that you can tweak. This is something that you can adjust depending on what you want as an individual. And what do I mean by that? Now, we trade using a risk to reward system, and where we place our reward sometimes is based on technicals, sometimes is based on personal preference. I mean, what do you want out of the trade per se? For example, if you're trading a prop firm account, let's say you're in phase 2, and you need 5% to actually pass your prop firm challenge in phase 2. Let's say, for example, you are already in profit around 3%. Okay, so all you need is about 2%, and you get into a trade where the potential of that trade is about 1:10, but you only need 2% to pass your prop firm challenge. So as at the time the trade is running in profit, let's say about 1 to 2 risk to reward, currently you can actually close the trade because you only need about 2% to pass your phase 2 of your prop firm challenge, right? Whereas somebody who's compounding their account, the person might want to maybe take partials and hold a runner for the account to really compound, or somebody who's swing trading might be willing to hold the entire position for a 1:10, 1:15, 1:20, depending on what you want out of the trade. So you can see that when it comes to trade management, is more or less so personal, right? What do you want out of your trade? Are you looking for a 3% reward, or are you looking for, are you a day trader? Are you a swing trader? Things of that nature. It differs from individual to individual. All right. Now, coming back to the first part of the analysis, of course, you guys know I use a top-down approach when it comes to, trading the market. Okay. So I start my analysis more so from the daily and or the 4-hour time frame, depending on what I see in the market, depending on what the price action is looking like and things of that nature. So I want to be starting from a higher time frame and I want to be working my way down to the lower time frame. So top-down approach, starting from daily and or 4-hour time frame, you want to determine the trend of the market. Of course, we all know that when it comes to trading, the trend is your friend. If the market is bullish, we want to be buyers. If the market is bearish, we want to be sellers. So the trend basically determines what we do in the market. I don't come to the market every day with an already premeditated bias. Okay. A lot of the times my students ask me during the weekend, what's your bias for gold for next week? I tell them I don't really have a bias for gold for next week until the market starts to actually move. I want the market to open. I want the market to give me a sense of direction before I start to jump into the market. Okay. I don't jump into the market before I start to determine what the sense of direction of the market is. This is something that's widely known as directional bias. Okay. So you derive your directional bias from the market itself, not from your mind, not from your thoughts, not from your feelings and emotions. Okay. The market shows us where it's headed to, and then we just follow the market. All right. So you want to determine the trend of the market, whether or not the market is bullish or the market is bearish. Now, after determining the trend of the market, you want to determine the structure of the trend. Okay. A lot of people say, oh, what's the trend of the market? No, I want to say that's wrong, because the market already has a directional bias. So what is the structure of the directional bias that you have determined? For example, if the market is bullish, is the market creating new higher highs and higher lows? Okay. If the market is bearish, is the market creating new lower lows and lower highs? Okay. That's what we mean by determining the structure of the trend. Okay. And the way that I teach, I'm trying to connect the dots, guys. I'm trying to connect the dots. Okay. This is going to be my first video of 2026. And I feel like it's very empirical for me to, share with you guys my trading plan and break down the trading plan to you guys, so you know exactly how I trade. All right. So you want to determine the structure of the trend. Now, mind you, when you're trying to determine your structure, we're also talking about internal and external structure. So you're going to be putting all of this into consideration, right? At the same time we're looking at the external structure, we're also looking at the internal structure as well. Of course, you can go back to the previous videos that I've done talking about market structure and things of that nature. There's a lot to learn on my YouTube page. And of course, if you're new here, again, I would like you to subscribe to the channel and go back to these previous videos, watch these previous videos, as you can learn a lot from these previous videos. All right, so moving on, you want to mark out your higher time frame demand and supply levels, basically talking about the levels where we're going to be trading from, or the zones we are going to be trading from. Okay, when it comes to zones, we simply have buying zones and selling zones. Some people call it support and resistance, some people call it demand and supply. Okay, whichever you want to call it. I know where I'm going to be buying from, so I want to call that a demand level. You can also call that a support level, since it's supporting price from going lower, we're buying from that level, right? Then when it comes to the supply level is another word for a resistance level. A resistance level is simply where we're going to be selling the market from. Okay, you don't want to overcomplicate this with massive terminologies. You want to keep things simple and straightforward. All right, so on the higher time frame, you want to be able to determine, right, where am I going to be buying from, or where is the market most likely to interact with and maybe buy and or sell. Now, once you mark out these zones on the higher time frame, these are the exact zones that you now want to refine. Okay, since we're doing something called top-down analysis, at the end of the day, we are selling from the higher time frame zones, but we can't be selling per se using the higher time frame zones, the range of the higher time frame zones as our entries and stop loss, because of course we're going to have massive zones on the higher time frame. So what we want to do is we want to refine these zones down to lower time frames where it's going to be easier for us to get a smaller area of risk, and of course the reward is going to then be maximized. Okay, so that's the first part of the trading plan, talking about the analysis part. Now, as soon as you do this, you already know where the market is going, you already know the structure of the market, and of course you already know the levels or the zones or the areas where you're going to be taking your execution from, whether or not it's going to be buying and or selling. All right, so the second part of the trading plan, talking about the confirmation part, this is when price has now gotten to these zones. Now, mind you, we got a zone on the higher time frame. We've been able to refine the zone on the higher time frame down to the lower time frames. For example, the way I do it is on the daily time frame, I refine down to the 4-hour time frame, then I refine down to the 2-hour or the 1-hour time frame. Now, at the point where all of these time frames meet, at the point of confluence of all of these time frames, I call it the G spot. Okay, my name is Glory. Oh my god, man, I found this, so it's only natural I call it the G spot. I know you guys have dirty minds and I know what's on your mind, but that's not what I'm talking about, man, trust me. So I call this the G spot. Now, the G spot for me is where the daily time frame, 4 hours time frame, and the 1-hour or 2-hour time frame converge, and you're going to see this on the chart based on my customization of my trading view. Okay, again, you want to learn how to customize your trading view to make the most out of it, or to get the most out of it. I'm going to be showing you guys exactly how to do that on my trading view. All right, so at this time we want to see price. Now, let's say price has entered the daily demand and or supply. It has come into the 4-hour within the daily, it has come into maybe the 1-hour within the 4-hour within the daily, or the 2-hour zone within the 4-hour zone within the daily zone. This is saying everything is still within the daily zone, but of course it's been refined. All right, so when you see price at these refined levels, you now want to wait for confirmation. Okay, you want to wait for a reaction from the zone, and you want to see a change of character. Now, all of these I'm going to be explaining very, very shortly as we progress in the video. So basically, you want to see these confirmations before you look to enter the market. Now, having said all of this, let's now jump into the market, and I'm going to be breaking down, like I said, my very first trade of 2026. So the first trade of 2026 came from an old love of mine. In 2025, I traded a lot of gold, I traded a lot of BTC. I didn't really trade a lot of Euro USD and GBP USD, but for the guys that have been following me for a very long time, you guys know Euro USD was my first love. Okay, I traded Euro USD for a very, very long time, and of course, when it comes to trading Euro USD, there's a lot I can tell you about the structure of the pair and everything. Now, on the daily time frame, which is where I like to start my analysis, I want to be zoomed out of the market and I want to be looking at the macro structure, right? So looking at Euro USD on the daily time frame, of course, the analysis started from all the way back here. Of course, this is not where I traded from, but just to give you a sense of what the analysis was looking like. So we have all this push to the downside, right? You can see the market broke structure to the downside here. So we're bearish, okay? Came all the way to this, came all the way there. I know this structure is not looking the cleanest, but guys, I'm trying to paint a picture for you guys, okay? So we had this, then we had this massive break to the downside. Now, since I'm looking from more so an external perspective, this is going to be my external structure. Now, based on all of these breaks to the downside that we have, when you zoom into this leg of price action, I want to believe that you can already see the internal structure of the market. Okay, I want to believe that you can already see the internal structure of the market. Now, mind you, this is the leg of price I'm looking at. This is the leg of price right here I'm looking at. So from this high all the way down to this low, so all of this is the leg of price that I'm looking at. This leg is responsible for this break of structure to the downside, more on kind of like an internal perspective. Then we also have another break of structure here to the downside. Now, this level here is the level responsible for this break of structure. So I want to be looking at these levels here if there's anything that's there that suggests that when the market comes back to this, it can probably sell. Okay, so that's basically the idea. Now, knowing the range of price that we're looking at, I can now start to zoom in. Okay, I can now start to zoom in here to get some form of internal structure. Now, zooming in here, not to make this very long, if you look at this area right here, you can see that there was a break of structure at the time. Okay, and the market never really fully mitigated this level here. If I zoom in a little bit, just opening this up, you don't have to be shy to open up your trading view. Trading view is your wife. You can open it up however way you want to. All right, so looking at this, we had this high, more so externally, we have this low, we have this high, and we had a break of structure to the downside. Now, if you look at this very, very closely, you can see how the market failed to mitigate that supply level there. For the people that have been following me for a very long time, of course, after trend comes structure, after structure comes zone. That's how I was able to get this as an order block. Or in this case, since I'm going to be selling from this level, this is going to be my supply level. But again, this is not even the level where the trade came from. I'm just trying to establish some form of backstory here. Now, if you go forward, you can see how the market eventually got to that level. Okay, the market eventually got to that level, and of course, it gave a change of character. So let me build a little bit of context here for you guys. So if we have a zone, something that looks like that, and then we have market structure heading towards that zone, we have high, low, high, low, high, low. As soon as we interact with this zone and have a change of character to the downside, depending on what this leg of price is, we're going to have a fresh zone where we can now look for selling. Okay, so we're going to have a fresh zone, something like this. Now, what I said earlier, depending on what this leg of price presents to us, we can have a scenario whereby we have multiple levels, talking about internal structure now, where we have something like a low, a high, before we finally take out this particular structure level here. Okay, and guys, notice how I'm following the trading plan. If you don't understand this, go back, rewatch the video over and over again. Trust me, you're going to understand. Now, with the diagram I have above up here, let's now come to the market, because a lot of people think that we just come up with these things. These are factual things. You can go back and check for yourself. You can see how the market is trending up to that level there. Okay, so if I pick my highlighter tool, you can see coming from here, we have a low. I'm going to be skipping some of these. We have a high, we have a low here. Okay, we have a high here. We have this here as a low. Now, mind you, this is the last low that created this high. Okay, so that's the last low that created this high. So if I'm going to draw out my structure here, I'm going to have something that looks like this, which is a perfect uptrend: high, low, and then high. So you can see how we have reacted off the zone and we have a change of character. Now, I know a lot of people like to argue that this is not a change of character simply because the body of the candle is not closing below this. But again, I don't want to go into why this is a change of character, but for me, I would interpret that as a change of character. So as I was saying, looking at more so the internal structure here, we now have high, low, high, and then we have this as a low. So now I have a supply level here, and I have, maybe a supply level here on another time frame. So basically, this was the supply level I was working with, and that's exactly where the trade came from. I don't want to make my charts too messy, so I'm going to be removing a lot of this. Again, you can go back and watch the video over and over again for you to have a deeper understanding of what I'm doing here. Guys, let's not complain in 2026 about how long my videos are. If you want the best from me, then you're going to have to sit your ass down and watch these videos, okay? Because I do a lot of explaining in my videos. I don't want to give you something that, at the end of the day, you're confused. How did I get here? How did I mark up this and this and this and the third? I'm doing a lot of breakdown. This is education on a whole different level, okay? So please keep that in mind. Now, looking at this, we have a simple downtrend. Having reacted off of this, we have a high, we have a low, we have this here as a high, we have this here as a low. And on the daily time frame here, it might look as though this order block has been mitigated on the daily time frame, and it's rightfully so. Okay, the market has come, it has interacted with the daily order block. Basically, it has mitigated the daily order block here, and then it continued to the downside here. But again, like I was saying, this is why refinement of zones is very, very important, because while something can be looking mitigated on a higher time frame, there could be something within the range of that supply or demand level on the higher time frame that on the lower time frame is not mitigated. So what I'm going to be doing here is I'm going to be splitting my screen so you can see simultaneously the daily time frame and the 4-hour time frame at the same time. So this is what I mean. Now on the daily time frame, now to just to give a little bit of context, this is when we mitigated the daily order block at the time. Okay, that's where the daily order block was mitigated. This here, okay, you can see that's where the daily order block was mitigated. Okay, I'm talking about this level here. Okay, you can see how I have two of these here, or this is what I'm going to do. I'm going to draw it on the daily time frame. So this level here, boom, that's where the daily order block was mitigated. Now looking at the 4-hour time frame, you can see clearly, okay, using 4-hour market structure, which is low, high, low on the 4-hour time frame, this is not mitigated on the 4-hour time frame. So while it's mitigated on the daily time frame, it's not mitigated on the 4-hour time frame. So what is this saying? It's saying that there's still something within that level that's tradable. Okay, and of course you can see what happened when the market got back to that level. The market reacted right off of that level, okay, and we had an amazing sell to the downside. All right, but again, that's not the trade. You can see how the market came up to the level. For the people within the community, you guys know we were buying all the while. So the market was coming back all the way to this. So we had high, we had low, we have high, we have low, and you guys can see that this is a very, very clean uptrend. All right, so we have high, we have low, then we had high. Now the very first time the market got to the supply level, there would have existed a very, very good opportunity for a sell around here, but unfortunately the market came back into the level, which means that we are not going to be looking at this structure anymore. Where we should be looking at is this structure here now. So that's where the focus is now placed. That's where priority is now placed. So zooming into that level there, okay, on the 4-hour time frame, zooming into this level here, we can see the simple pattern once again. Okay, you can see the simple pattern once again, talking about market structure, where we have this here as a low, this here as a high, this here as a higher low. We can see the market creating higher high around here. This week is telling me that the market pulled back a little bit. There was a low here. The market created a high again. The market created a low. Mind you, there was no change of character here. All right, now the market pierced into the zone again before we had a change of character. That's a change of character right there. Okay, now if you can't see this very well, I'm going to double click on this, go to style, click on the line and increase the opacity. Okay, so you can see the structure very, very well. Now looking at this, and again, stretch out your trading view, guys. Don't be shy, stretch it out. All right, so looking at what we have here, more so internal structure, which is where we are going to be focusing on. Now mind you, we are still on a higher time frame, guys. This is on the 4-hour time frame. Okay, so looking at what we have here, the market has now given us a change of character on the 4-hour time frame, so we can now go down to the lower time frame to look for our trade. So let's go down to the 2-hour time frame first of all. Let's go down to the 2-hour time frame. All right, so look at what we have now. Mind you, okay, let's go back to what we had on the daily time frame. So this is what I was saying, this is what I was talking about when I was talking about the G spot, guys. So this is the daily order block. This right here is the daily order block. This right here is the 4-hour order block. And I'm talking about order block, I'm also talking about supply levels. Okay, that's the 4-hour supply levels. In fact, we had two supply levels on the 4-hour. No, this is 2-hour. We had two supply levels on the 2-hour time frame. This would have been at the time a decisional level, and of course the one above would be an extreme level. Now looking at this, the market invalidated the decisional on the 2-hour. Now notice how this decisional level on the 2-hour is still within the 4-hour order block. Guys, I really hope you guys understand this. I really hope you do understand this. Okay, so let's go back to what happened here. You can see the first time the market came here, we had a very nice sell from this area here, and this could have given you a very good 1:5 risk to reward trade. Okay, but the market had other plans. All right, this is what I call the G spot, guys. This is what I call the G spot. All right, so look at this. This gave you a very nice 1-8 risk to reward trade, but unfortunately the market came back. Now the market ended up invalidating this level here. I would have loved to see the market get to this level, okay, but it happened that the market never got to that level there. Now it was messy for a little bit, just simply because we were at festive period, all of this ranging market, but at the end of the day, the market still follows the exact same principles. Now I would have loved to see the market react from here before it started selling, but I like to say that the market simply grabbed liquidity here. So for the guys who trade ICT and things of that nature, you can see how the market grabbed liquidity around this high here before changing character. Now, if you look at how the market reacted, okay, we can see that after the liquidity grab, a sort of downtrend started where we had this high, we had some kind of low here. Mind you, the market was ranging here at the time, so we had this low. We came back to this high. This is a liquidity grab, but this video is not about liquidity. So we have this push to the downside, we have this push. Now, mind you, a lot of selling opportunities in all of this because we already reacted from the higher time frame zone, so the selling has already started. But I'm giving this as an example because I want you to trade after the change of character. So at this point here, character has already been changed, but of course the market is still looking very messy. Okay, so we have this low, we have this high, then we had this low till to the downside. And as soon as I saw this, I was like, man, this is actually my trade. Why? Because I can establish the fact that we already have a valid trend. This is a downtrend. Okay, now let me go back to conceptual view. Okay, so this is what I mean, right? On a higher time frame, we've already done this. We have reacted from the zone, okay, and we have changed character on the higher time frame. However, when we jump to the lower time frame, what we can see is on the lower time frame we have an independent trend that's already been playing out, low, high, low, high, low, high, before we had the change of character. So simultaneously, this is what is now the external, while this is now the internal. Now mind you, this is the point of the change of character right here. Now following the internal structure, I have a breaker level just around here, which is kind of aligned with this. Then I have more so an internal order block following the internal structure, and that's exactly how I was able to get that trade. So having seen this conceptual view, let's now go back into the market. Okay, so just like I explained, you can see how we have this. Now this is your breaker level. Okay, this is your breaker level where the change of character came from. So this will be your breaker level. You can see how this level is aligned. Okay, you know what, I'm going to remove this. Let's go back to the 4-hour time frame. This particular example is kind of messy, so I really hope you can follow. So looking at this, the structure that we're having is, you can see this as a low highlighter. So this is my high, that's a low. Okay, we are closing below this valid change of character. We have this high, then we have this low to the downside. Now looking at this, we have this as a breaker level here, okay, and we have this as an order block. So it was simply for the market to come back into this order block for it to sell down. That was the trade, guys. I'm going to show you guys this trade on the 30 minutes time frame. Okay, so look at it right there. That was where the trade came from. Now mind you, don't pay attention to all of this ranging. I want you to pay more attention to the structure. Okay, pay more attention to the structure of the market right now. Now looking at this structure of the market, this is on the 30 minutes time frame. Now my external structure is from this high, okay, to this low. That's my external structure, right? My internal structure now, like I said, you want to be looking at internal and external structure. So my internal structure is coming from this high, okay, low. Notice how on the internal structure all of the supply levels are mitigated. So we have low, we have high, we have low, we have high, and from this high we have this massive run to the downside. Now notice how after this break of structure here, the market never really came back to mitigate this. So my trade basically came from this supply level just right here on the 30 minutes time frame. I think I used the 1-hour time frame. So my order block was slightly bigger. Yes, so my trade idea came from right here. You can see how the market failed to come back to mitigate this. So that was my trade idea. So this was my first trade of 2026. This is I think I used about a 15 pip stop loss for this. Okay, just because I wanted the stop loss to be a whole number. So I used a 15 pip stop loss, and the target was this equal lows around this area here. That's a 1 to 3 risk to reward. And of course the market smashed the target and even came a lot lower here. Okay, this is in total a 1:6 risk to reward trade, and of course it definitely smashed the target and went a lot lower. So that was my first trade of 2026. You can see how I'm using the exact same trading plan that I used in 2022, 2023, 2024, and in 2025. I'm using that exact same trading plan in 2026. Nothing has really changed in terms of the strategy. Nothing has really changed in terms of the approach. Nothing has really changed in terms of the methodologies, in terms of the mindsets which I used to attack the market is basically the same. But of course, this year we want to go heavier on risk. We want to go heavier on, the lot sizes and things of that nature. I really hope you guys enjoyed this video. Like I said, it's my first trade of 2026, and I really just wanted to share it with you guys to prove to you that I'm using the exact same trading plan. I'm using the exact same trading strategy. And of course, I've given you guys now the trading plan here. You can copy the trading plan, copy the trading strategy, whatever you want to do with this information, it is all up to you. So at this point, I want to say thank you guys for watching this video. And of course, again, if you're not subscribed to the channel, please do so right now. And of course, I want to say again a very, very big happy new year to you guys. I wish you guys a very, very very profitable. I wish you guys a very amazing. I wish you guys a very good year, and I'll see you guys in another one, man. Gang.